top 5 Vanguard ETFs. ETFs are accounted for 25% of my investment portfolio, and I'm never gonna sell them. I love them a lot, and I believe that if you are a beginner investor, building your core portfolio with index fund ETFs is the safest way to go. Hello everyone, Alex is here. I hope you're doing well. I hope you're staying safe and positive. Today is going to be a very exciting video for you where I'm going to be breaking down the best top 5 Vanguard ETFs of total of 42 ETFs, 42 Vanguard ETFs we currently have on the Canadian stock market. There's only 5 that I think are the best and worth actually investing into. Having quite a big chunk allocated to ETFs, around 25 to 50% of your portfolio, makes a big difference, gives you a ton of safety, and diversifies your investments from get-go. Why ETFs? Investing in stocks is way more fun. Totally, I agree with you. But it also gives you a ton of more risk, and nobody or not a lot of people can predict where the stock is gonna go and if it's gonna go up or down, if it's gonna sustain the dividends or not. It's way more complicated than going with the ETFs where you have allocation to a ton of stocks at the same time. You basically diversifying yourself into a lot of companies with just buying a single share of the ETF. But before we start, you gotta like this video for YouTube algorithm. Just do it right now. Thank you. So what is your goal with ETFs? Are you planning to invest into it for a long term, using like a robo-advisor, for example, Wealthsimple, and come back to it after 10, 20, 30 years? It's time in the market, not time in the market. I keep saying this in all my videos because this is very important. And why actually Vanguard? Because Vanguard is the leader in the ETF world. They tend to have the lowest fees possible for their ETFs. They've been on the market for a long-term period, so they have the sustained returns. They have the sustained history actually making you money, making us more money. That's why I think it's one of the best providers, ETF providers out there. And the first one for today is going to be S&P 500 Index ETF. And the ticker symbol is VFV.TO or VSP.TO. for Canadian hedged version of it. And the VFV actually tracks the performance of the S&P 500 index, one of the most popular index, because it has the top companies out there and it tends to have the best performance, gives you the best returns over the long-term period. For VFV ETF, they have a history since 2012, and since then, this ETF returned around 17.08% annually. This is great. Where else you can get a return like that with the safety of this quality, right? The merit it has is also on the lower side, is at 0.09%. This is super low in terms of the merit. And this is one of the Canada's most popular ETFs for investors who wants to invest into US stocks. The VSP version of it, the Canadian hedged, is for those who actually want to secure themselves from the weakness of the American dollar. But also it can keep them away from more gains if, say, American dollar is going to be performing better than Canadian dollar, right? So it's totally up to you. What is your vision for this currency battle for the future? Other than that, these two ETFs actually have the same thing underneath themselves. I personally invest into VFV, so I'm not trying to predict anything with the American US dollar. I'm just staying the course of the stock market. Looking at their holdings, the top 5 out there would be Apple and Microsoft, Amazon, Facebook, and Alphabet. So all these tech stocks are the top 5 holdings of this ETF. The tech's been ruling the market for the last 30 years. This is crazy. There are also other companies in there like Tesla, Nvidia, JP Morgan, and more. So let's move on. The second one on the list today is FTSE Canada All Cap Index ETF. The ticker symbol is VCN.TO. I talked about this ETF multiple times in many of my previous videos because this is one of the best ETFs out there, period. It has the lowest fee possible of 0.05%, right? It also invests into different cap companies, large, medium, and small cap companies. So you are diversifying yourself into all sorts of business sizes. As Canada mostly dominated by financial and energy sector, with this ETF you actually diversify yourself into other sectors pretty nicely. Looking at their holdings, we have a lot of companies that we all know, such as Shopify, Royal Bank of Canada, TD Bank, Enbridge, Bank of Nova Scotia, Brookfield Asset Management Incorporated, Bank of Montreal, Canadian National Railway, Canadian Pacific Railway, and CIBC Bank. But there are also companies that we never heard before, the small cap companies out there, which have more potential to actually break out and skyrocket because they have more room to grow, right? Looking at the performance of this ETF, since the inception in 2013, it delivered around 9% annual returns, which is pretty good for the Canadian stock market. It's a little lower if you compare it to the S&P 500 we just talked about, right? You gotta have this one probably as well in your portfolio. It's your choice if you want to do it or not. I have it in my portfolio, and I believe in the Canadian stock market and in Canadian economy, Canadian businesses. Moving on to the next one, which is the Total US Market ETF. The ticker symbol is VUN.TO, and it also has its Canadian hedged version, which is VUS.TO. These two are exactly the same. And what it's doing is actually trying to track, to the extent possible, the performance of the broad US equity index that measures the investment returns of primarily large cap companies. It also has mid-size and small and micro-size stocks in there as well, but the primary allocation is going to the large cap stocks. The allocation this ETF is actually very similar to the S&P 500 that we just talked about, and you can see there are companies such as Apple, Microsoft, Amazon, Facebook, Google, Tesla, Nvidia, JP Morgan, right? So it's very similar. The performance of this ETF is actually also very similar to the S&P 500. You are diversifying yourself to the entire US stock market. The safety is insane, and the performance is actually pretty good as well. 15% per year. Where else you can get that for such a good diversification? And the fee for the Total US Market ETF is actually at 0.16%, a little higher than the other two ETFs we just talked about, but it's also on the lower end. So now we covered the entire US market, Canadian stock market, and the best 500 stocks on the US market as well. Moving on to the next one, now we're gonna move out from US and Canada, we're going international. And now we have the International Equity ETF with the ticker symbol as VIU.TO. And it also has its Canadian hedged version, which is VIE.TO. That's pretty cool that they do this. So you gotta use it or not. Up to you. It's actually trying to track the performance to the extent possible, as always, of the broad global equity index that focuses on providing coverage of developed markets. It invests into large, mid, and small cap stocks of companies located in developed markets, excluding US and Canada. This is pretty cool that they do this and that this ETF actually exists. The fee for this ETF is going to be a little higher on the higher end, is at 0.22%, which is still pretty low if you compare it to the mutual funds, but it's on the higher side if you compare to the other three ETFs we just talked about, right? And now looking at the holdings of these ETFs, and even though it has equity from outside US and Canada, some of the companies are actually pretty familiar. Look here, it has Samsung in there, it has Toyota Motor, companies like AstraZeneca, Hello Vaccinations. A lot of other countries outside of Canada, US actually exist, and they're performing pretty good as well. So with this ETF, you have exposure to that. And now the final ETF for today, which is going to be pretty exciting, and it's a one-way street, one path to go, one solution for everything. It's the all-in-one full equity ETF. The ticker symbol is VEQT.TO. And this is a single solution ETF that invests 100% to stocks, but going into the whole world. So it has US stocks, Canadian stocks, developed countries, and emerging markets. You buy a single share of that, have the whole world covered, right? All the stocks everywhere. They have other ETFs like that, the balanced, conservative, and growth, right? But I like this full equity one. And in my opinion, going all in into equity through ETFs is the best way to get the most returns possible for the next 10, 20, 30 years. So that's what I'm doing. Again, it's totally up to you what you're going to be doing. Another cool part about this ETF is actually that it rebalanced every single day. So you shouldn't worry about doing all that for yourself. The ETF is going to do everything for you. The fee though is on the higher side. It's at 0.24%, which is still on the lower side if you compare it to anything else outside of passively managed ETFs. But it's on the higher side compared to the other Vanguard top 5 ETFs we talked about today. And looking at the size of this ETF, it actually has around 13,000 stocks in it. It's a crazy number. Most of it, like 80% of these stocks, are actually large cap companies. But you still have around 20% allocated to the rest. Looking at geographical diversification for this ETF, we can see that North America is actually on the top of the list with 71%. Europe, it has around 12%, Pacific 8%, and around 8% to the emerging market. Looking at the countries, United States and Canada is actually on top of the list with 42% and almost 30% for Canada. Then we have Japan 4.6%, China 3%, UK around 3%, France around 2%, Germany, Switzerland, Taiwan, Australia. The top holdings it has in their portfolio, most of them will be from US or Canada. Shopify from Canada, Apple, RBC Bank from Canada, Microsoft US, then TD Bank, Amazon, Enbridge, Bank of Nova Scotia, Brookfield, and Bank of Montreal. And from these holdings, it's pretty interesting to see that if the stock is from US, it's going to be a tech stock. But if the stock is from Canada, it's going to be, well, Shopify, of course, tech stock, but the rest is going to be either financials or energy. So these were the top 5 Vanguard ETFs out there that you might consider investing into. And Vanguard is my favorite ETF provider. I love them for their fees, for the strategy that they're using for their ETFs, for their historical records and performance and all that. So with all that, thank you for watching. Don't forget to smash the like, subscribe to my channel, hit the bell, and I'll see you around. All the best out there. Keep investing. Cheers. Bye.